So this week, a deal was struck to acquire Morrisons, the UK's fourth largest supermarket chain, for a price of £9.5 billion. The chain is being bought by 3 private investment groups, but is being led by the Fortress Investment Group specifically. Fortress is owned by SoftBank, a Japanese conglomerate. This comes after Morrisons rejected a bid of £8.7 billion last week, which was offered by US private equity house Clayton, Dubilier Rice. We explored the failed CD&R bid and its effects in detail in our previous video on the topic, so be sure to check it out. After rejecting the CD&R bid, Morrisons' share price jumped by 34% last week. This is why the investment group Fortress is making a higher offer. It now values Morrisons' shares of 252 pence per share, as opposed to CD&R's earlier 230 pence per share offer. But the increased price was not the only reason Morrisons preferred Fortress's offer over CD&R's. After rejecting CD&R's bid, Morrisons said that their bid significantly undervalued their business. Compare this with the comments on Fortress's bid. Morrisons' chair, Andrew Higson, said that they accepted the bid after looking very carefully at Fortress's approach, their plans for the business, and their overall suitability as an owner of a unique British food maker and shopkeeper. As part of their investor agreement, Fortress made a series of commitments. They pledged to keep the Morrisons headquarters in Bradford, to safeguard pensions, and to stay true to the supermarket's commitment to pay all staff £10 per hour. In contrast to the CD&R bid, these pledges demonstrate Fortress's commitment to the longevity of Morrisons' business. Fortress also said that they did not anticipate to carry out any substantial sale-and-leasebacks of Morrisons' properties. This was another stark difference from CD&R. They wanted to make short-term profits from Morrisons' vast property portfolio rather than focus on its supermarket business. However, CD&R is not out of the running just yet. If it wants, it can make a counter bid during the months that it will take to finalize the deal between Fortress and Morrisons. However, if its intentions were easy money from the supermarket's property portfolio, then it is unlikely that it will keep pursuing this deal. When it is finalized, the Fortress Morrisons deal will be the largest UK private equity buyout since KKR bought Boots in 2007. Over the last 12 months, at least 12 UK-listed companies have been bought by foreign buyout groups. This is because Brexit and the pandemic have lowered their share prices, making them attractive for foreign private investors. As we looked at in our earlier video, foreign investor buyouts are not favorable for the target company's business. They prioritize short-term profits over the long-term interests of the company. This is especially the case for companies in the retail sector, which are targeted for their rich property portfolios. Therefore, Morrisons may have gotten lucky to be approached by an investor who is interested in the long-term health of the business. Also, Morrisons rejecting the CD&R bid may have been a blessing in disguise. Before CD&R approached them, Morrisons' shares had actually fallen by 6.3% as revenue grew poorly during the pandemic. Therefore, not only did the CD&R offer draw the attention of more potential investors, it also set the tone for a higher offer, since it led to the share price skyrocketing. Moreover, the Fortress deal may have wider repercussions for other planned buyouts. For instance, it may encourage established British investors of UK-listed companies to resist buyouts entirely, based on concerns that they do not care for the business. Alternatively, the British investors may follow Fortress's approach. That is to say, before accepting an offer, they may demand that buyout groups sign investor agreements, which put the interests of the business first. But at the end of the day, the investor's prime concern is still to make a profit. If a higher offer comes along, how long or how many investors will actually resist the urge to sell a struggling company, even if it does damage to its long-term health? As always, thank you for watching this video. Don't forget to leave us a like, comment, and subscribe for more great content.